Hey guys, Mike here. So we get to answer your questions, see your comments and stuff. So I hope you guys will help out in this because I sure don't have all the answers, and you will definitely learn something, especially when it comes to Apple and Warren Buffett and stuff like that. Because I did a members video back in June, and I learned something for sure. I did not know this is what hedge funds actually do or why they do this. Okay, and it'll explain to you, give you a really shining example of why Apple stock in particular, but other stocks don't fall like the majority do in a down market, or that kind of stuff, and you'll get to see it. So hopefully, but we're going to be talking about IWM, oil prices, you name it, we're going to get into it. So let's start off here with IWM because I get a lot of questions about this one. And Whitebeard has said, the Russell is the canary in the coal mine. We are headed for a recession. That's why the Russell is not going anywhere. And I will say this, I want to put this chart somewhere as I put it here for you. This is NFIB small business job openings hard to fill. And it's not, I don't really want to look to the right of what's happening. You see it sloping down, right? So, and you see the bottom chart's way worse. But when you look over here, every other time it's been looking like this, we've already been in a recession. And I think if you look at small cap stocks and the companies themselves, and why? Because it's got to do with the rates, right? And I'll show you something coming out tomorrow. I'll put it in there for you to show you, these companies, they have to issue a lot of debt to stay in business, right? They're not like these big mega cap stocks, okay, who have just billions in cash flow, okay? And they're having to issue a much higher rate. They're having to refinance at a much higher rate. And so these price increases wage increases for employees affect them a lot more than they will the larger companies, right? And so they're going to feel this effect, especially if they stay higher for longer. The bankruptcies aren't the mega caps going bankrupt. It's smaller companies going bankrupt. That's what's happening. And so again, they're the ones that are going to feel it. Plus IWM feels it because it doesn't have the magnificent 7 or 9 or whatever number you want to put on that. It doesn't have that. It doesn't have the AI bubble push in it either, like you see with the S&P and the NASDAQ, right? It doesn't have any of those. So everything that's raising up these other indexes, the IWM basically has none of that. It's just the way it is, right? And then of course the way they weight their stocks, they don't have 13 stocks that make up 30-40% of the index, and so that's why you're seeing this happening. And plus, he's right. I mean, it is like you get to see what the economy is really about by looking at the smaller caps and the micro caps versus the large mega caps. So let's just keep that in mind and tie into that on top of what's another thing, and this is where Jeff talks about this. I think we go to the gap down from the Fitch downgrade, but speaking of downgrades, I wonder if Moody's will start downgrading banks and stuff because of a possible government shutdown October 1st. And Jeff, I don't know if they'll do that or not because I can't predict these people. I mean, if they got something in it, they probably will. But also, what does IWM have? Whole lot of regional banks. What are at risk in this kind of environment? Whole lot of regional banks by carrying billions of dollars in losses, having to borrow a bunch of money from the Fed at like a 5% interest rate. I don't think they'll I don't know why they would downgrade the banks over a possible government shutdown because the Fed is what's supporting the banks, right? And the Fed is an independent entity. Like taxpayer dollars do not fund the Fed. They're funded off that huge balance sheet with all those investments, all that money they're loaning out to banks at 5% interest. What is it, 180 billion or some crazy mess they've loaned out. And so, I don't know if it'd be because of that, but it could be because there's a lot more stress on the banking system as long as these rates stay where they're at, for sure. And as long as they keep carrying all these losses, these regional banks are especially at a higher risk. And so, yeah, we'll keep that in mind. And again, if the rating agency has something to get out of it or gets paid to do it, they'll do it. Don't be surprised, all right? But I will say, I will wait for see a lot of negativity. Like when that rating downgrade will do its most effect, that's when you'll see it. That's the one prediction I will make on that. Now, when it comes to oil, we get a lot of stuff on this. I'll read a couple in a row on this. So Victor says the oil drillers won't drill because the price of oil is too low. So I guess at $90 a barrel, they don't make any profit. And so I appreciate you letting us know that. Also, Robert here says, do you think OPEC holding oil production flat will increase gas diesel prices across the U.S.? Also, if gas prices stay high, will this drive more consumers to EVs? I'll say this, I don't know if it'll drive consumers to EVs. You know why I don't think that? Because look around your neighborhood and look at your own household. How many people drive regular cars? Not an SUV, not a sports SUV, not a truck. Cars. Well, it ain't me. It ain't none of our friends actually own regular cars. I look around my neighborhood here and there, and most EV makers besides Rivian, and then Tesla has their truck coming out, but they basically just sell, most of them sell cars. Like 90% of what they offer is cars, and that's not what the majority of Americans drive anymore. So when it comes to that, I don't think so. But when it comes to oil, oh yeah, absolutely. When you look at this right here, oil's not going up for no reason. And so it's up big since July. And it is coming into heavy resistance right here. So we'll see if it makes it through that. If it makes it through that, absolutely it's going higher. I mean, that's going to be bullish. Now, what have we been talking about? What's causing inflation to go higher? Because oil doesn't just affect the gas. It affects fertilizer prices and all kinds of stuff. So I didn't know that until last year. But now I know about that stuff. But yes, of course it's going to affect gas prices right here because, I mean, just look at this. If this was a stock, what would you be saying? I wish I was in it back here, right? And what are you seeing? Higher highs and higher lows. That's what you're seeing. And so if this continues to go up, I think oil don't even have to really go up much from here. If it just stays elevated for long periods of time, it's absolutely going to have a negative effect on the economy and the consumer. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And this leads us into Apple and Warren Buffett and China and stuff, okay? And so I'll read a couple of these back to back. And this one says, weirdest market I've ever seen. Even Buffett to part billions in apples versus diversifying a little across Google and MS is absurd. The guy moves out of BYD due to China risk, but stays 50% in Apple, which has a huge China risk, crazy times. And then again, Whitebeard comes out and says, Mike, I have money sitting in city savings that paying 4.25%. The only way I would put a lot of money in the markets when stocks get a lot cheaper. We will go into a recession before this is over, and stupid for me to put money in this market. Why you think Buffett has billions of cash sitting around? He's waiting on greater deals. And I'll address a couple of these right here. One is he does have a lot of money in cash. He increased it from Q1 to Q2, so he has about 147 billion sitting there in cash, and he was a net seller of stocks in Q2. Now, one reason I think this is, not that he follows this, but it is called the Buffett indicator for a reason, is because the current ratio of 177% is approximately 47.02%, or 1.5 standard deviations above the historical trend line he's talking about relative to the GDP. And so when you look at this chart here, which I always like to watch, and I only pay attention to it when it starts getting into really 2 standard deviations, because that's when we always sell off. But it's moving up. It's 1.5 standard deviations above. It says the market's overvalued. Now, him holding so much Apple, this is true too. It's kind of crazy. You wouldn't think it's about Warren Buffett, but this says, just came out this week, 46% of his portfolio is Apple. I mean, it is a $164 billion stake in Apple. And this is where you're going to get to learn something, because I learned this when I put this video out. When did I put this video out? Looks like in June of this year. And so I'm going to let you hear a clip. And this is one thing about Apple. This is why Apple doesn't fall like other stocks do. Okay, so you're going to learn something, so pay close attention. And again, I put this just a members video. This didn't go out to you guys, but I put it out in June right here. And it's titled, I had no idea this is why fund managers won't sell certain stocks.
But I'll give you an anecdote that speaks to this, having to do something. I was once presenting, this probably almost 20 years ago, and I said, this stock is particularly steep. I think you should trim it. And the PM says, I can't. And I said, why not? What do you mean? Of course you can. He said, no, I can never buy it back. I said, that is the stupidest thing I've ever heard. Of course, trim it now, and if it dips, you'll buy it back. He said, no, you understand. We're full as a firm. We can only have a limit of so much that this firm can own of that stock. And it's full. So if I give this up, someone else internally, another PM will grab it, and I will be locked out of this thing forever. Now think about that. That's not money management. That's not valuation. That's not discussing free cash flow. That's just playing chess with a benchmark. In fact, with a situation where you can't give up a stock because you'll never be able to touch it again. So finding NVIDIA 10 years ago, or an ISRG, when everyone else has got a knife and a scalpel and you've got a robot in the operating room, you want to own ISRG. The point is that there are mechanical things. These people are benchmarked to an index. They are forced, the word Danny used, they are forced to do things that sometimes in a practical sense they wouldn't otherwise do. They have to benchmark. They cannot let the benchmark get away from them by too much, because you lose your job.
And so in the comments, did you know that? Because it doesn't just apply to Apple, right? It applies to a lot of these mega cap stocks for sure, or even other stocks. And so it makes a lot more sense now that I look at it and go, oh, I just didn't realize they were held that. And this guy's been in the business for years and he didn't know it. Right? So he has huge clients. He was like, what? And so that's what you're doing. And so, yeah, again, it's not about fundamentals a lot of times. It's like, hey, I can't lose this stock as a fund manager or I'll get fired. Right? And so, and they're always competing against each other. Right? If you ever watch that show Suits on Netflix, which I highly recommend, my wife and I have been binge watching it, you'll see it. It's a dog dog eat world, or however that saying goes. And the next comment is talking about the money market funds, which I was talking about, has like trillions of dollars in it, and it might flow into the stock market at some point in time. And Thomas talks about, the extra money earning in these money market funds, they're basically just paying for all the goods and services with higher inflation and stuff. And so therefore, by the time what they earn in these money market funds versus what they're paying is a net zero, and that means no money going into stocks. And Thomas, I think we're talking about two different things. Like you're what it sounds like to me, you're talking about, well, they're earning the interest, but then by the time what they're paying, it cancels each other out. I'm not even talking about that. What I'm talking about is the fact that that money is sitting there, and eventually there will come a day, as it always does in the stock market, whether it's after recession, whether we don't go into recession, whatever it is, where that money is going to move, right? And when it moves, it's going to be a huge flow, like a waterfall coming into the stock market. Again, when's that going to happen? We don't know. But if you look at that chart I showed you, I think you saw the same thing happen after the '08 crash and stuff. And you've seen it multiple other times in history happen. So just keep that in mind, because people are going to go, oh, I can make more than 5%, or especially if rates start to get cut, right? Remember, if rates go down in a recession, the money market ain't going to be doing nothing, right? And so they're going to flow back into the stock market. That's something else to keep in mind. And so a lot of people are just sitting on the sidelines waiting for the recession to happen. And then when that happens, of course, if a recession really happens in the bad one, rates are going to come down. Again, our money will be earning nothing in banks, and they'll flow it back into the stock market. So that's what I'm talking about, just to make it clear. Now, Alan goes on to ask, and maybe one of you guys can answer this. I don't really have a good answer for this one. How can you see the data if a stock is being short squeezed? How did Wall Street Bets basically do what they did, right? And so there's a site one of you guys put me onto called Float Checker. I wouldn't recommend it for what he's talking about, though. I mean, this one you can go in. It'll show you like 5 different sites as far as what percentage of the float is short, what the float is, and outstanding share. And you can click on all kinds of good stuff here. Again, it has a delay to it. So if you guys in the bottom can go down and see what is a site you trust where you can actually see up-to-date data, especially on a daily basis, would be great as far as what's short and everything. And if it's a free service, that's great. If it's paid, put it down there as well, and just put if it's a paid service or not. So hopefully we can get you an answer on that one. Now, from New Zealand here, appreciate you guys. Says things are already crashing in New Zealand. Many jobs losses and more to come. Stock market has been on the decline for weeks, and many shares down between 10-30%, some that much in a single day. Consumers have closed their wallets. And again, I don't live in New Zealand, so I had to look this up. And this comes from a couple months ago. Yeah, New Zealand has fallen to recession. Gross domestic product declines for a second straight quarter. Recession confirmation comes 4 months ahead of an election. And why? Because they're doing what we're doing. They're raising rates, okay? And so, again, I think their rates are at a 14-year high right now. And so, again, their stock market probably ain't made up of 9 stocks. That's why the stock market may be down over there. But they're in a recession. You got other areas of the world that are in recession right now. And so, and here, it feels like you're almost in a rolling recession, depending on what kind of company you work for, what area of the country you're in. Now, lastly, Brian here says, Mike, just curious how you as a trader support the communist Democrats in office. Just curious because it's obvious you're more left. And Brian, I'm going to go ahead and guess by that comment, you're probably a Republican and you don't like Democrats, and that's fine. For me, I'm actually, honestly, a registered independent. But, I voted for Democrat, Republican, and independent. So for me, I'm kind of right down the middle of a lot of stuff, but I'm one of those people like Chris Rock said in the comedy show one time, I don't know how anybody, it's just one thing, how anybody conservative, call themselves a conservative or a liberal, I don't get it. I'm conservative on some things, liberal on others, right down the middle. But more importantly, I just believe in common sense. That's what I believe in, and I don't understand if it don't make sense. I don't know why we're doing it, and I believe in that they in Washington should be reaching across the aisle. I don't believe one party is the problem, for everything. I think both parties, the way they've gone, if you look back 20, maybe 30 years ago, what each party actually represented and what they represent now, it's a lot different. We used to have a lot of politicians that would reach across the aisle while we used to get stuff done. And now people that, try to be in the middle like me, you're almost a minority at this point in time, because we've turned into what some people like to call it tribal. I say it's an insult to tribes to say that. We become cult-like. And the reason why I say cult-like, because in a cult, you don't get a vote. You follow what the leader says, right? And that's what you got a lot of groups in this country doing. Even parts of the Democrats, parts of the Republicans, right? In a tribe, people leave tribes, people vote, and leaders are voted in tribes and stuff like that. And so it's just different. And so that's why I say we're a cult-like society. I hope that changes one day, but it's kind of tough, and it's going to depend on the younger generation to change it, because our generation is not gonna do it. So that's where I'm at least. So anyway, and hopefully that answers your question. So yeah, I'm not a communist. I don't think you actually understand what the definition of communism is by the way you put it there, but I can tell which way you lean. So yeah, but anyway, there you go. So I hope you guys got something out of it as usual. Keep the question and comments coming. Hit that like and subscribe button. I really appreciate it. It makes people, or helps people find the video and stuff. And maybe we can get some more answers to questions and stuff and more comments and get a conversation going. Isn't that a nice thing to have? So anyway, hope you guys have a good one. See you tomorrow.